loan. So it's good to go out there, educate yourself on what types of things that might be. A good resource is if you have a loan on the home currently, contact that lender. And don't feel like you're inconveniencing them by asking them questions, because it's also an opportunity to talk about what your game plan is going to be going forward once you sell your home, because odds are you're selling because you're buying another one. Mm-hmm. So definitely look at some of the resources and talk to your real estate agent, talk to someone like Sean who knows what they're looking for in that arena, to see if they can point anything out.
Awesome. And for the sellers who are on this call, our webinar next week, which will be next Wednesday, it's a third of our 3-part series, goes really deep into what you do when you're buying and selling at the same time, because there's a lot of questions and anxieties, and depending on every situation is different. So we can dig into that a lot deeper once we start our webinar next week. So if that's something that you are considering doing, or if you know anybody who's considering jumping into that arena, please feel free to send them the link or give them the info@whitediamondrealty.net's email address, and we can get some more information to them. So then we have the final work, the paperwork. You've already gone with your realtor, decided your realtor, you've talked about, done the market research to see what the market is saying your property is worth, photography, and prepare for showings. Just get ready. The first 2 weeks of a house being on the market is usually the most busy. So you really want to be ready to hit the ground running. All right, so next we're going to talk to you buyers. Sorry, we didn't mean to bore you, but the buyers also have to keep calm and be prepared. And one of the first things I recommend that buyers do whenever they're getting ready is to make checklists. Okay, checklists are really good. And if you're buying with someone else, with a partner or a friend or a parent, I would recommend that you make your own lists separately and then come together and compare them, because some people are really worried, well, I really want this and they really want that, and we're not going to be able to come to an agreement. But I find that when people make their own list and then they come together and compare them, there's a lot more in common than they think. And then you're going to prepare for what you need to compromise on and what you need to stick with. But checklists, I always recommend 3. So the first one is your must-haves. There are certain criteria that you just absolutely have to have. You have to have a certain number of bedrooms maybe, or if you're a car collector, you have to have a really big garage, or if there's a certain school you want your children to go to, that's the school district that you want to be in. So have a list of your must-haves. And then the second list is you would really like to have. It would really be a bonus to have, say, a dishwasher, or a den, or an extra bedroom that can be used as an office. That's a really must-have, but it wouldn't necessarily be a deal breaker. It's something that you may be able to live without. And then my third list is what I like to call would be awesome, but. It would be awesome if the yard was already fenced in, but it's something we can put in later. It would be awesome if it had a pool, but I think we can live without a pool. So those 3 lists, so that you have a really good idea going in of what you are looking forward to and what it really means for your family going forward. And then you guys also need to interview realtors. Trust me when I say you are going to spend a lot of time with your real estate agent. So you want to be very particular of who you choose. You can also ask your friends and family for recommendations and such, but always insert the rule of 3. Rule of 3 for realtors, inspectors, lenders, all that good stuff, because this is a trusted person who you're going to confide in, and they're going to advise you. You're going to be going through this with somebody that you want to make sure that it's somebody that you trust and you feel confident in. So make sure that you interview some realtors. Affordability is a really important one. So sit down, take a look at your budget, take a look at your bills, decide what it is you can afford per month, so that you're comfortable, because not all, just because you're approved for something doesn't mean that that's what you want to pay. So a lot of people will go online, they'll go on to, online mortgage calculators, and they'll put in the big numbers, $200,000 or $300,000, and they'll put it in the mortgage calculator, and then it'll magically spit out this number. Well, that's not necessarily accurate, first of all. And at the end of the day, it doesn't matter what the big number is. What matters is for the next 5 years, that check you're going to write, or actually, let's be honest, that draft that's going to come directly out of your checking account, that is the number that matters. So let me go to Cody on this one. Why should a lender be one of the first people that a buyer talks to?
Well, like you said, it is important to make sure you have your own expectations set before you talk to anyone. When you go to a lender, for instance, when I usually tell people that when you come out of that initial conversation with me, you should come out with 3 numbers. You should come out with the bank's number as far as what you can actually qualify for as a maximum. You should come out with Cody's number, which is going to kind of give you some things to think about to make sure that you don't set yourself up to be house poor. And then you should have your number, which is where you're comfortable. And those should all 3 line up. Ideally, and if they don't, then we need to talk about that certainly. But it's important to have a conversation with a lender as one of the first steps. I mean, whether you're having a casual conversation just to help figure out affordability, or more formal conversation to have your credit pulled and obtain a pre-qualification or pre-approval letter, knowing what's available before you start looking to help you keep your expectations realistic will just streamline your entire process. Mm-hmm. And then plus, if there's any issues, maybe if your credit's not great, or maybe we need to try to figure out how to restructure some debt to get your debt to income ratio where it needs to be. Sure. We can start ironing that out before you really start looking.
Mm-hmm. Yeah, because the last time, the last time you want to, what I mean by last time is the time that you do not want to find that out is when you have found the house that you have fallen in love with, and that you have to wait. So that's awesome. So and piggybacking on that, how about credit score? How important is credit score?
I mean, credit score is extremely important among many factors of the mortgage, depending on what program you end up going with. Most programs, the interest rate is very dependent on the credit score. Some of the things that go along with that, like private mortgage insurance, which I'm sure we'll talk about, is priced based on credit score. So the higher we can get your score, the better your pricing is going to be and the more affordable it's going to be.
Okay, but do people have to, does their credit score have to be perfect, or is there some leeway as far as?
There is certainly some leeway, and there's a lot of things that are overlooked. But I mean, again, going back to different programs, and I won't dip into those too deeply. But where there's a will, there's a way. Let me put it that way. So even if it is a little bit too bad to get you in there, a no now does not mean no forever.
Sure. And I'm sure both of those questions kind of answer the question of how they know what kind of program. So once you put those pieces of the puzzle together, you'll have a good idea of what kind of program is best for the buyer, correct?
That's correct. It's a lot of Q&A, figuring out short-term goals, long-term goals, mm-hmm. Down payment situations, all that stuff. Every bank has different products. Every bank has different niches. And then of course there's a lot of similarities between them, and similar to, like you said, with shopping, if you will, the rule of 3 applies here too. Always talk to at least 3 lenders, and make sure you get a lot of detail from them, as far as it's not just about interest rate. Like you said, you're not just about price. It's not just about interest rate. There's a lot that falls into that.
Yes, absolutely. And that was next. So when they're shopping, they should be asking a lot more questions than just rate, and then comparing apples to apples, because there's different closing cost points and stuff like that. Correct?
That's correct. And I would encourage folks, out of those 3 lenders, at least have 2 of them be local. Mm-hmm. Don't forget that those of us that are local have reputations to uphold. And if I see you in the grocery store and I've done you dirty, I've got to face you.
Yeah.
Versus,
yeah. There's not a place for the online lenders, but there's a lot of fine print. There's a lot of fine print.
So ask for detail, do your comparisons, ask for either a loan estimate form or a rate, a fees worksheet, something of that nature, to break down everything.
Mm-hmm. And that should be something that they willingly give over. So if you're shopping for a loan and you ask for a closing cost breakdown or an estimated closing cost sheet and they say no, that's a little bit of a red flag, I would say. So my last question for you right now, Cody, is the monthly payment. You had alluded to PMI before, and I had said that the mortgage calculators online are not necessarily accurate, because they don't always include everything that's within a monthly payment. Could you go into details of what's included?
Yeah, absolutely. And as you mentioned, I mean, in our local area, when you're looking at North Central West Virginia or Southwestern Pennsylvania, those payments are going to vary drastically, because in West Virginia, we have your real estate tax is what we call escrowed in with your payment, along with your homeowner's insurance. Mm-hmm. In Pennsylvania, you're also going to have your county tax, your township tax, and your school tax that are included in that as well. So that does not include your personal property tax like on your vehicles, but the real estate tax and homeowners insurance are included with your mortgage payment. Generally speaking, there's times where it's not, and that's again an important question to ask. And then PMI is private mortgage insurance, and kind of try to make this as short as possible. I mean, back in the day, if you didn't have 20% to buy a home, you couldn't buy a home. And that was designed so that the buyer would have some skin in the game, would be less likely to walk away. And if they did ever walk away from the loan or from the house, then the bank had the ability to recuperate a majority of their portion of what's in the house. So PMI now, I mean, you can borrow 100%. But PMI is designed, it's an insurance premium that you pay that would cover the bank in the event of a loss. So it's not an evil thing. You don't get anything back out of it other than you get to put less money down. Mm-hmm. And again, it's priced very much so based on program, credit score, percentage that you put down, loan amount, type of home you're buying. There's so many things that go into it. But it's a very important detail. And that, of course, again, would be included. And be careful when you're looking at those. Some programs, that PMI is for the life of the loan. Some of them, it's only on there temporarily.
Gotcha. Thank you. That's really helpful, because that's really important. And I think, because 95% of people who start looking are looking online, and when they don't understand that, they can get a false sense of affordability when they go on, and all they're looking is at their principal and interest. They're not taking into account these other things. So they go in with the hopes that they can afford a lot more when the actual payment is going to be to where their debt to net ratio brings their actual spending power down. So that's why it's really important to do that kind of first. And then don't be afraid to talk to more than one lender. Also, give the lenders go ahead and let them run your credit. They cannot give you an accurate idea of what they can do for you until they pull your credit report. And a lot of people are worried about when the lenders pull their credit report, it's going to be a hit on your credit. So the credit bureaus are going to see that you're pulling your credit. And yes, that's true. However, it is different. They changed this a couple decades ago, I think by now, to where the credit bureaus see that when you are, the way that mortgage lenders pull your credit, it's a little bit different. So they recognize that credit pull is for a mortgage. And when you do it within a very short period of time, say within a week or two, and you have 2 or 3 or 4 in lending institutions pulling your credit, the credit bureau understands that you're shopping for a mortgage. And so they only count one pull against you. They do not count all of them against you. And it's very short-lived. It drops off very, very quickly. Because they're encouraging you. They don't want you to be hurt by shopping for a mortgage. I will say one other thing for that, though, be cautious of things like Lending Tree, where they say they're going to shop for loans for you, because when you sign the dotted line on there, a lot of times what you're agreeing to is for them to be continually soliciting for loans for you, and therefore your credit is being continually pulled. And it will go outside of that range, and that can really, really damage your credit long term. So be very, very cautious of that kind of stuff. I had a client who learned that the hard way. So once you talk with your loan officers, you really need to get a pre-approval. You need to know, first of all, how much you're going to spend. If I give you a credit card and say go shopping, but you don't know what the credit limit is, how do you know where you're going to go shopping? You're going to go to Gabe's, you're going to go to Nordstrom's, going to go to Plato's Closet. You don't really know. So you really want to know realistically what you're shopping for. And no matter what market you're in, but especially in our market here in North Central West Virginia, it is a very competitive market. And if you find the house that you love and you want to put an offer in, but you have not been pre-qualified or pre-approved for a loan, it really throws up a red flag for the lenders. And if you are in a multiple offers, for the sellers, and if you're in a multiple offer situation, which oftentimes you will be, then that can make you or break you. So that's a really important thing to have. The other thing to prepare for is upfront expenses. You will have some upfront expenses that you need to start sacking away for, or know that you need to set aside. Earnest money deposit, that is an initial, what we call a good faith deposit, that goes to the listing broker and is held in escrow during the closing process. And that just ensures that you're not going to, for no reason, walk away. So if you have to cancel the contract for a legitimate reason, such as inspections or appraisal, 9 times out of 10, you're going to get that back. However, if you just simply get cold feet and walk away, the seller is entitled to keep that. That will be credited back to you at closing. So you will get that back, but it is an upfront expense. Inspections are an upfront expense, and appraisal is an upfront expense. Sean, real quick, About just kind of ballpark, and I don't want to put you on the spot because I know you can't speak for other folks, but about how much should they set aside for inspections?
I would say most inspections are going to be anywhere below for a small home, $300, and they could be up to $400 or $500 for a home inspection.
Okay.
I know that if you want me to do a radon test, a lot of inspectors, we charge about the same $175 for a radon test by itself. But if you do the home inspection and radon test, I just charge $100 for the radon test. So hopefully that'll give you a kind of a ballpark figure.
Yeah, sure. And there's other little things like, you know, should you decide to have a mold test if you're going to termite test, but that gives you a really good ballpark question. All right, so this is where we're going to take a break. I'm going to take some Q&A. I do have one question, but if anybody else has any questions that come up based on what we've talked about so far, go ahead and pop them in there. The question is, so is PMI a requirement for loans or optional? Cody?
So you're going to hear me say this multiple times throughout this. It's going to be dependent on the program. And you know, your typical conventional cookie cutter programs, if you put less than 20% down, it is required. Now there are other programs, and I'll just touch on them quickly, like USDA, for instance, which has a lot of different other requirements. They'll do 100%. PMI is also required on that, but it's a lot less. There are some banks that have 100% financing programs that have no PMI. But you're typically looking at an adjustable rate mortgage, which is a whole nother subject. Sure. So, you know, again, it's going to be dependent on, and that's where it's important to have the conversation, not only with 3 different lenders, but have them give you multiple options, because there might be an option with PMI, one without PMI, and typically there's give and take within those different options.
Awesome, great. Okay, and then one more question. Do you provide a buyer's checklist? Yes, as a matter of fact, we do have, I have both a buyer's guide and a seller's guide. If that's something, I have both hard copy and I have a digital flyer form of that. So if you would like me to send that to you, please just PM or chat message me your email address, and I'm happy to get that to you. And it goes over, it's really just kind of a bullet list of a lot of what we're going over today. So that's a really good question. Let me see if I have any others. One more. How do loans differ for modular and double wides on permanent foundations? That would be
I bet you're never going to guess what I'm about to say. It depends on the program. I mean, there are typically different requirements. Sometimes they'll require more money down, depending on the life expectancy of the home, which is decided basically by the appraiser. You could be required to have a shorter term on a manufactured home. And actually, I know Sean does inspections on the different types of foundations that are required for those. Yes. But they are very program specific, and you know they are typically going to require more money down. Not always, but typically.
Sure. And then, and I think maybe to piggyback on that, double wides you can get a mortgage on. Single wides you have to get a personal loan on. Is that generally correct?
Single wides are considered personal property instead of real property. There is 1 or 2 banks in town locally that I'm aware of that will look at single wides and doing loans with those. But they are challenging. For instance, First United does not have a loan program for single wides, but we do. Yes, we do double wides.
Okay. All right, great, awesome. And I think, although I'm having trouble, I can't get to my Facebook side of it. I think that's pretty much all we have for the questions and answers right now. I'll give another quick second. Anybody else have any questions, or should we move on? All right, let's go ahead and move on. That's cool. So, all right, so you have listened to Melissa and you have kept calm and you've prepared. And so now, hey ho, let's go. It's time to have fun. Sellers, always assume you have a showing today. I am not a bed maker. My bed was not made before I left the house this morning. confessions of a true professional. However, while you are like I said before, especially the first 2 weeks of being listed, you're going to get a lot of showing activity. So always assume you're going to have a showing. Put your breakfast dishes in the dishwasher, make your bed, try to keep up on everything. Now, we do try to give you as much notice as possible whenever especially when the house is occupied. But like I said, this is a very active market. This is not the only active market in the area, but this is a particularly active market right now. And as much as we try to do that, sometimes we'll be out and about, we'll get last minute showing requests if, it comes up and say, hey, I'm going to be in town only for this afternoon. Is there any way I can see it? So really try to ensure that it's ready. Not saying you can't deny a showing, but if obviously you want to take as many as you can. My second one for you would be to make sure that your house is safe. Especially we have winter coming up. If it snows, make sure that your sidewalks and your driveways are shoveled and salt is put down. If you have loose carpeting, make sure you tack that down. If you have shrubbery that's kind of growing over the sidewalks, you just want to ensure that your liability is as little as possible. Other people are going to be on your property. We hope that nothing is going to go wrong, but sometimes people will trip and fall. So you just want to make sure that you keep everything as safe as possible. And my next one kind of scares people a little bit. It's not that people are casing out your house, but this is what my dad always referred to as keeping honest people honest. So if you have medications in your medicine cabinet, I would recommend putting them somewhere not in your medicine cabinet. If you have guns, put them in your gun safe. Don't leave your wads of cash from the hotspot last night sitting on the counter whenever people come in. So, agents will stay with their clients as they're walking through, as generally maybe giving them a little space. We do follow them around. We're not necessarily with them 100% of the time. So it's just better safe than sorry to make sure that those little things are taken care of. Buyers. How do I find listings? Because there's so many websites out there. Well, you can go to, the office that you're working with. You can go to their website, such as whitediamondrealty.net, and you can do searches there. Some websites, such as ours, do allow for notifications of new listings that come on. The MLS within our area, the North Central West Virginia MLS system, they do also have an automated email alert system that we can set up for you. The reason is that our market, the way that we mark houses is under contract. We say contingent, not under contract. So not all of those big box websites such as Zillow and Trulia will recognize that. And it gets very frustrating when you're online, you find all these really cool houses, and then you call your agent and you're like, I want to see this one, this one, this one, this one. And 3 of the 4 of them are under contract. So I would talk with your agent as far as the best way to get listings to you and as quickly as possible. And honestly, I know I keep saying it, but if you see one that really raises an eyebrow, I highly recommend you go see it quickly. I had 2 listings in the last 2 weeks that went on under contract within 24 hours of being listed. So you really want to kind of stay on top of the ball if you're seriously looking. What's the protocol for being in someone's home? Just like you're visiting their home, please take off your shoes. That's only common courtesy. It's okay to look in closets and check out the kitchen cabinets and stuff, but please don't go digging through drawers and getting into places. If you think you shouldn't be there, you probably shouldn't, but that doesn't mean you can't, look to see how big the closets and stuff like that are. In this age of COVID, we are a little bit different. Also, some sellers will have different guidelines than others. Some agents have different guidelines than others. I do encourage my sellers, speaking of sellers, to sometimes maybe if they feel better, leave all the lights on, open the closet doors a little bit so the touching is kept to a minimum. Whenever I'm with buyers, I will often touch the things for them. So I'll sanitize my hands when I go in, I'll open the doors and turn on the lights for them, and then do everything else. So there's as little touching as possible. Hopefully we won't have to do that for forever, but for right now, that's what it is. So kind of that, and keeping your shoes off. If you open a door, make sure you close it. Now, your realtors are professional. We know to go around and check all the doors and such like that, but just kind of that stuff. And then a lot of buyers also wonder how open houses work. It is fine. Even if you're working with an agent, by all means, go to open houses. First of all, it's fun. Second of all, it's a really good way to look at a few of them in an afternoon. Just let the realtor who's working the open house know who you're working with, so that way they can follow up with your agent and get any feedback or interest or stuff like that. And just kind of keep that professionalism there. And then this is a really big one. When do I know I found the one? So it's really hard sometimes for people to allow themselves to make an emotional decision. And I'm here to tell you, it's okay. Make an emotional decision. This is not just a house. This is your home. It will be your home for, on average, your next 3 to 5 years, maybe into 7, 10. It could be for your forever home. So as long as it's checked most of the boxes on that list that you made a while ago, it's okay if it's making you flutter inside for you to get excited and it be the one and then start yelling, I don't care how, I want it now. That's the one I want. So that's fine. Make an emotional decision. This is your home. You're making your life here. It should be something you're excited about and nervous and scared. That's okay. Those are the emotions too, but that's all good. So then once you have found the one, what is it that you want to do? So then we go into our negotiation phase. So the definition, in my opinion, the definition of negotiation is a meeting of the minds. So some people go into negotiations thinking that they have to just fight for everything they want. Well, everybody's goal is to get to the closing table. The buyer's goal is to have the keys dropped into their hands. The seller's goal is to drop their keys into the buyer's hands. So think about that when you're coming to negotiation. That doesn't mean you have to pay over full price and you know, or give the buyers everything that they're asking for, but try not to be too hard-headed about it. And also know that there are a lot of components that can go into the negotiations. It is not all just about the price. Yes, price is a big part of it, but it's not all about it. Some of it is, you know, inspections. So Sean, I'm going to ask you here, what kind of inspections are required when you're buying a house?
Well, from the lender perspective, they don't really require any inspections except perhaps a pest inspection, but your real estate contract often will say contingent on a home inspection, sometimes a radon test, and also a mold test. So that seems to be the top three. Those are the three that I do: a full home inspection, radon testing, and also mold testing. I will also look for pests when I'm doing the inspection. I had one in Alpine Lake last week. We found a lot of evidence of bats in the attic space. The one this morning, there was evidence of past termite damage, not anything serious, and I will look for those kinds of things. But generally speaking, banks, lenders would rather have a pest company do the pest inspection because they can treat the problem. But as far as on my end, as far as what inspections are required, that depends on your real estate contract, but generally at least a home inspection, and oftentimes a radon test and a mold test.
Yeah, I would say those are the most common ones. And when we say pest inspection, what we mean is wood destroying organisms.
Right.
So termites, carpenter bees, carpenter ants. So not like rodents or little centipedes or stuff like that. So something that could actually affect the structure of the home. That's what we're looking. That's what we mean when we say pest inspection. Home warranty, that's another one that's a good negotiating, that's often found in negotiating factors. A home warranty is basically, it's a 1-year policy. It's not an insurance policy, but it's a 1-year policy, just like a car that covers certain functioning components of the house. So if your air conditioner would go out, or if your refrigerator would go out, the home warranty would cover a portion of that. And that's something that's often negotiated in. Seller credits is another really big one, especially with first-time home buyers. First-time home buyers are, you know, they're excited and they're emotional rich, but they're sometimes a little cash poor. So be expected. It's good to expect sellers, those of you sellers who would be in a typical first-time home buyer price range, that part of the negotiations may be giving the buyer gives a little bit higher of a price, but that is so those closing costs can be rolled in, because then it's just that much less out of the buyer's pocket, making it easier for them to buy a house. Closing date, not all of our dates are on track. A buyer could be up against a lease and they have to get out sooner rather than later. A seller may be waiting until, you know, they find a house that they're moving into. So closing date can also be a negotiating tool. And appliances. Now in this market, it's assumed that the kitchen appliances stay. So unless they're sitting on top of the counter, so the refrigerator, the range, the dishwasher, garbage disposal obviously is attached. If the microwave is installed above the range, that's assumed that it goes. So those are kind of assumed that they go with. If they are not, if you are not conveying those, I would recommend you replace them before you put it on the market, just so it doesn't become a contention of negotiation. And then, but appliances that are often negotiable are washers and dryers. If it's a lot of land and there's a big old lawnmower on there, but you're not going to tell Cody that. So you just got to keep that to yourself. and the dehumidifier, stuff like that. So there's a lot to go into the negotiation. Just keep in mind that the point of negotiations is to come to a meeting of the minds in order to get on your next path, on your next step to the path to crossing your threshold. So now what happens after we do the negotiations? Well, we go under contract, and what happens? The clock starts ticking. The clock starts ticking whenever you go under contract. It is, this is when we have to stay up with our contingency dates. So, you know, there's a certain time to get everything done. So we really have to hustle. So once you go under contract, if your lender or your agent tells you that they need something, please try to get it to them as quickly as possible, because we're really trying to do, I know it sounds like we're going to be nagging you, but we're nagging you for a reason, in order to get you to where you need to go. So obviously the big one is the loan process. So Cody, I'm going to ask you, what documentation should buyers have on hand to start the loan process?
Well, hopefully at this point in the process, they've already figured out who they're going to use. They've been pre-qualified and they've been given a list and plenty of time to gather it. So generally speaking, you're going to be providing things such as pay stubs, prior 2 years W-2s, prior 2 years tax returns, bank statements to show that you have the funds available that are going to be required at closing. Obviously, a lot of verbal information, you know, social security number, things like that. But different, and again, as always, different programs require certain different types of documentation, but generally speaking, those are the things that you want to keep. And I will say, keep in mind, if a lender gives you a list, it is not negotiable. If they ask you for something, they need it. And it's unfortunate. Yeah, and it's unfortunate because, you know, a lot of things that we ask for, you're going to be like, well, I already gave you something that has that, and it's going to seem a little bit redundant. But somebody somewhere has tried to trick the system. Therefore, everybody has to bring everything to the table. So just keep that in mind. If they ask for it, like Melissa said, make sure you get it quickly to keep the process moving.
Cool. And how about their rate? When does that get locked in?
So some lenders will lock them at the date of application. Some lenders will wait and lock them when they get the appraisal back. Again, program specific. And that's an important thing to ask when you are rate shopping, is to know when that rate's going to lock in, depending on how vulnerable the rate market is at that time.
Okay, awesome. How about, okay, so we've talked about what buyers need to do whenever they're, you know, getting ready for a loan. Is there anything they should avoid during the loan process?
So sometimes jokingly say, don't change your underwear without calling your lender. And what I mean by that is there are things during the process that could cause the loan to derail prior to closing. So even though you might have your approval, quote unquote, which would be like a commitment or a conditional approval, you're not done yet. So during that process, don't ever have your credit pulled. Yeah, you might see a great deal on, you know, 0% interest for a new sectional couch. That's all fine and good. Wait till your loan closes, because if you obtain that new credit card and you put a balance on it, and we go to pull your credit again with a soft hit before closing, and your debt to income ratio is shot up, your loan is now declined. So that's number one. Avoid large deposits into your checking account without talking to your lender first. Generally, anything that's larger than your typical paycheck is going to be questioned as to where that money came from. And then job changes. If you're planning to change jobs, generally speaking, don't. But if you are going to, during the loan process, make sure you talk to your lender first to make sure that that's not going to cause your loan to go sideways.
And even if it means you're making more money, because I think I've found a lot of folks say, well, I was making more money, but if you're changing industries, that it can cause an issue, correct?
Yeah, changing industries, changing pay structures, you know, especially if you're going from a W-2 wage to a, well, or I shouldn't say, if you're going from a salary to a commission position, you just have to be very, very careful. So again, have that conversation with them.
Okay, awesome. And then the next big one is the inspections. So the inspections, you need to schedule them right away. The two biggest anxiety producing contingencies in a contract or the inspections and the appraisal. We want to get them done as quickly as possible. And in a busy selling season, inspectors are busy. So you want to make sure that you're scheduling that fairly quickly. Now, when I say you're scheduling it, what happens is your agent will send you several inspectors that they commonly work with for you to choose from, and then the agent will arrange that. But you want to get that out of the way pretty quickly. So Sean, should buyers attend the inspection once they're scheduled?
Yes, I strongly encourage buyers to attend the inspection. Do they have to? And the answer is no. I've got one next week, next Thursday. The gentleman is in Charleston. He can't make it. That's fine. We'll talk at length after the inspection by phone. But if you can be there, I would encourage you strongly to be there. That gives you an opportunity to look at the house again, an opportunity to ask a lot of questions, and be there during the inspection process. So absolutely, it's a big purchase, and I would encourage buyers to be there.
Okay, awesome. Awesome. And how about sellers?
That's a tough one. If the buyer is not going to attend, I really don't care who's there. I will share a story with you. I had one that should have been a very easy inspection, but we had renters. Not a problem, but the buyer had taken off from work, and the renters did not want to move. So they know that the house was being sold, but they also didn't want to move. And to make a very long story short, they did not want the buyer to be in there, and it became an issue that didn't have to be. But we got through it and got the inspection done. In the same fashion with sellers, if the buyer is going to attend, I would encourage the sellers not to be there. But sometimes sellers have to work from home. That's kind of a different story than people just renting. And if the seller has to work from home, it's not a problem. We can work around the seller. But as a general rule, if the seller can maybe scoot for a couple of hours, that would be great, because while you or I, Melissa, are very comfortable being in other people's homes,
Right.
oftentimes buyers are not. It's a very kind of emotional process for them.
Sure.
They don't know what to touch, what to look at. They just don't want to offend the person who's selling the home, because that's their home and not the buyer's home. And so that way they're a little more comfortable if the seller's gone. Yeah,
absolutely. And you also don't want to have a conversation, conversing with the seller is not always a good idea, because it can cause some issues. So I know
correct.
That if you're working with an agent, they're going to give you a list, but in general speaking, how do buyers know if they're hiring someone who's qualified?
If you get a licensed inspector in West Virginia, there's a couple things you should know right off the bat. They should have done at least 100 inspections. They passed an exam. They have ongoing training. We have to go through a very intensive background check, as you can imagine, because we're in people's homes all the time. I have given my fingerprints to the FBI and the state police.
Wow.
And that's required to get the lockbox key, so that we can get in and do our job. But if there's one thing that you do want to look for, and I really think that would be experience. And I'll tell you why. An experienced inspector knows the neighborhoods. They know the homes. They can basically, with a glance, see what they've got going on. For example, I'm from Morgantown. I grew up here. And I know on one side of Rotary Street, everything's fine. On the other side of Rotary Street in Suncrest, we have a lot of clay in the soil, and there's a lot of homes that might have a push on the foundation wall. Those are just things that you get through experience. Also, in the past couple of weeks, I've wrote quite a number of letters to USDA with regards to roof inspections. Actually, right before this webinar, I had an appraiser call me, Rachel, about a house in Kingwood, and I'm writing a letter to USDA to address something so that we can get the loan moving for the person buying it. And being an experienced inspector, appraisers know that they can call me with questions, and I can do these things. As Cody mentioned earlier, I also do the foundation inspections with regards to manufactured homes, double wides, also known as sectionals, and that's very important as well. That turns it from personal property into real property once a manufactured home is permanently affixed to the ground. So an experienced inspector knows how to do all of those things. So that's what I think would be probably the number one, is a lot of experience.
Okay. All right, awesome. And then for the seller side, is there anything they need to do to prepare for an inspection specifically?
Well, if they have any pets, it would be nice to put them in cages if they're dangerous, or, but sometimes you have, I've been in homes where that you can actually tell the pooch is pretty friendly and it's not a problem. But if you have any pets that might have some anxiety of people coming in the house, you might want to put them in a room or maybe in a cage just temporarily. Also, maybe move some furniture and some things away from the electrical panel and also move
Okay.
some furniture and things away from the attic access.
Okay.
People forget about that, and I've actually moved furniture and all kinds of boxes and things just to be able to try to squeeze into an attic space. So if they could help me with that, that would be great.
Awesome. And then once you've done the inspection, about how long, or in general, I'm sorry, I know you can't speak for other inspectors, but in general, about how long before the report's released?
Well, if I do an inspection, the same day that I do it, I'll have the inspection report completed that day, because I know time is of the essence, as we say in the real estate industry.
For sure.
If they want a mold test and a radon test, I will try to go out 2 days before the inspection to drop off the radon monitor, because when I pick it up 2 days later, I can actually download it and get the radon results that day of the inspection. But also, if I do the mold test a day or two earlier, I can ship it out to the lab and we'll have the mold test results that day. So I try to get everything completed the day of the inspection.
Okay. And then once they have that report, who do they share that with?
Well, if they have an agent, and they should, they can share that with their realtor, but that report really is for them, and who they want to share that with is really up to them. But I will say that the one person they shouldn't share their report with would be a lender. A lender really doesn't want to see the report. Once you do that, then the lender is basically privy to things that may need repaired. I did have somebody do that about 3 months ago, and it just created a nightmare. They didn't know, and all of a sudden, all these repairs had to be made based on my 60-page report, and it was just, yeah, so you don't want to do that. But you definitely want to give that to your realtor, because that realtor represents you. And I would say that would be the one person you definitely do want to give the report to.
Awesome. And now let's go back into that. So speaking of sharing it, so now we talk about negotiating repairs. So once we have these reports back, you and your agent, you buyers and your agent are going to go through the report and decide what it is what, if anything, you're not quite comfortable with and you want to address. So this is one of the big negotiating aspects of it. Also, one of the reasons why you want to be nice in the first negotiating part, because you have to continue negotiating things throughout the process. So there you have 3 options once you review that report. So you can either accept the property as is and move forward. You can say, there's too many things, I'm too concerned, this is not something I'm comfortable with doing, and cancel the agreement. And at that time, you would get your earnest money deposit back once all parties agree. Or you can negotiate for repairs. Now, if you decide that you want to negotiate for repairs, then there are a few different ways you can address that, because there's never any one easy answer, right, Cody? It all depends, right? So, so you can either, if you're comfortable with the sellers taking care of it, you can send a list of repairs to the sellers, as well as the inspection report, so that they can see exactly what the inspector had noted on there, and ask that they take care of these repairs in whatever manner you seem reasonable. And then you go back and forth, and sometimes they'll just say yes, or sometimes they'll say, okay, I'll take care of some of them, but not all of them. And you go back and forth that way. You can also adjust the purchase price. So sometimes the buyers would prefer to have that work done by them, on their own. Once they own the house, so that they have a contractor that they trust that they want to use, you can just reduce the price of the purchase, reduce the purchase price of the property to compensate for that. Or you can ask for a credit in lieu of repair. So that means you would get a credit in the amount that you seem reasonable, that both parties seem reasonable, instead of addressing the repairs. Now, this is a little tricky, and you want to talk with your lender before this, because if you've already asked for seller assistance in the original negotiations, this may or may not be an option. Not necessarily that it wouldn't be possible, but you want to make sure that you see what kind of limitations you have. So there are a bunch of different ways that you can address these things that come up. Honestly, it is not very often that a contract is canceled because of the repairs. Typically, we can come to an agreement and come to a meeting of the minds and be able to move forward past this. But the inspection is a very, very important part of this process. And then the last one is, I would say, is the appraisal. And on this one, I'm going to ask Cody, when is the appraisal ordered? Would be my question for that one.
So typically, we'll wait until your loan's at least approved before we would collect money to order the appraisal. Most lenders, to my knowledge, will have you pay for that appraisal before it is ordered, just in case the loan goes sideways or the appraisal comes in low. You'll get a copy of your appraisal report, but not necessarily your money back. So we try to order it as soon as possible within the loan process. because it is one of the items that takes the longest depending on the current market. So for instance, I'll call it pre-COVID, we were getting appraisals back typically within 2 weeks, and things were moving nice and quick, anything we tried to do. But when this most recent refi boom hit, we're seeing appraisals take up to 4 weeks now. And that's not to say that can't get a little bit worse. So it's extremely important to get your loan process ordered or started quickly so that we can get your appraisal ordered very quickly. But appraisers will, and when we order them, we look at the timelines, and we always try to shoot for a timeline that is appropriate within your contract deadline, to try to prioritize those and get them back as quickly as possible.
Okay. And then same question as I had for Sean, do you share the report with anybody?
So the lender will send it just to the borrower, and then it's of course up to the borrower or buyer to share it. I mean, it's certainly something, like Sean mentioned, your realtor is on your side. So it's something you could share. The only instance where it would really need to or have to be shared with the seller or the seller's agent would be in an instance when the appraisal comes back too low.
And you have just provided me the perfect segue. Thank you so much, Mr. Sistakowski. And that is, what if the appraisal comes back low? And that's exactly what we do. So we have another negotiating point here. So if the appraisal comes back low, first of all, we do have to share the appraisal with the seller so that the seller sees what the appraised value is. And then here we go, negotiations start. So one of three things can happen. You can cancel the agreement because you can't come to an agreement, or you can, actually one of four things. You can negotiate to where the seller will accept the appraised value and then continue on as if, with no harm, no foul, except to the seller, I guess, because they're giving that concession. The buyer can have the harm and the foul and bring the difference between the purchase price and the appraised price to closing, or anywhere in between those last two scenarios. So you can negotiate maybe splitting it halfway, or coming down a little bit on price, and then with the seller coming down a little bit on price and the buyer bringing a little bit to the table. I will say again that this does not happen very often. Now, sometimes, yes, an appraisal will come back a little low, but it is rarely so low that you can't come to agreement, because you have professionals helping with this. So you have an agent who, whenever the seller put it on the market, the agent did their due diligence and did a market analysis, and you guys came to an agreement of a marketing price that reflected the current market conditions. And if you also have usually a buyer's agent who most likely did the same thing when they were coming up with the offer price. So typically, if this happens, it really is not a matter of more than a couple $1,000s. So it's usually a pretty scalable wall to climb. It's not often that something comes back so low that we just have to shake hands and part as friends. So, and then the other question would be, what if the appraisal comes back high? Well, that's awesome. You have instant equity that you're walking into, but really it doesn't make a difference. But at that point, you're so far along in the loan, it's not really gonna change anything. So I'm gonna go ahead and stop here and ask, and you get some questions. I'm coming up on the last turn here for the Kentucky Derby, for people who watched the Kentucky Derby last time. I do have one question, and that is, can home loans include cost of repairs for a home? Cody, that one will be for you.
Depending on how much, yes. And again, there are programs out there that are specifically geared towards, updates, upgrades, repairs. It really depends on the extent of the repair. And a lot of times what we can do is, if it's something that the bank is requiring to be fixed, for instance, often they'll escrow money at closing and hold it until it does get fixed. So we may not have to hold up closing, but we might have to hold money in an account and control that disbursement to make sure that it does get fixed. So that's a very loaded question, but again, there are options out there, certainly, so just when you're looking at the homes and you're going into it, depending, there's going to be things, visual repairs that you might be able to notice that are going to have to be fixed, so you can get out ahead of that and make sure you're picking the right loan program. Otherwise, if there are things that, maybe Sean caught something that when he was tearing apart the furnace and happened to notice that something was cracked in there and it needs replaced, that's typically going to be negotiated outside of the loan.
Mm-hmm. Awesome. Any other questions at this point in time? Nope, just a thank you. Thank you for that lovely and thorough answer. All right, so now we are going to move on to the closing process. We're almost there, folks. You're almost passing those keys along. So I'm going to ask Sean at this point, should the inspector come back and review the repairs once they were completed?
Well, when I do an inspection, I always, part of my service is I'll come back to the property one time for free. And the reason is sometimes if you're doing an inspection, it's possible the utilities could be off. I've been there when the electric's been off or the water has been shut off. So I'll come back to the property once those utilities are turned on to complete the inspection. But that also includes coming back to check repairs. Early this morning, I actually went out to a house to check repairs. The repairs were made, and I did an addendum to the report, sent that to the buyer. They're happy. They know that the repairs have been completed. Sometimes buyers are okay just checking the repairs themselves on their final walkthrough, but if they want me to, I would be happy to come back and check repairs. So we can certainly, a good inspector would do that, yes.
Awesome. And Cody, so that now at this point, are we finally done with paperwork?
I think you'll find with the mortgage loan, you're never done with paperwork.
Not even after the closing.
I will say the closer you get to closing, the more attention you should pay to your emails and phone calls that you're receiving from your lender or the processor that's assigned to the loan, because that's when crunch time hits. As far as updating any paperwork, for instance, like you mentioned at the beginning of the call, as regulations change. So for instance, right now we're dealing with where pay stubs can't be any older than 60 days with most places. So if the pay stubs are old, we've got to get updated pay stubs before we can close. And that's just, that's one example of many. If they've now reviewed your new bank statement that you gave us and there's a large deposit in there, now we've got to either have a letter of explanation or find the source or a gift letter, something like that. Those are just a few examples last minute that you could be scrambling to get. So it's just, it's important to stay on your toes right up to the last minute. Awesome.
Awesome. So at this point, then we start ordering the title work, and that is something that is actually ordered by the lender. The bank will order it, and then it'll go to the settlement attorney, which is chosen by the buyer. We'll take care of the title search, and that just ensures that there's no, outstanding liens or owners that we don't know about whenever they're transferring the property, because we need to make sure that it has clear title. Like I said, the buyer chooses the settlement attorney, the seller chooses the deed attorney. So the seller chooses an attorney, which is sometimes the same person, to take care of the deed. So now let's go over real quickly kind of the buyer's expenses versus the seller's expenses. So when you're on the buyer's side, the title work that the settlement attorney does is on the buyer's side. The lender's fees, the recording of the mortgage is an expense there. The lender's title insurance is an expense to the buyer, as is the owner's title insurance if they choose to have that. That is optional. Escrow funds. So we talked earlier about insurance and taxes being paid within that payment. The lenders will require that about 3 months of that be prepaid into the escrow account as a little bit of a cushion. Your home insurance premium, typically you'll have to pay for 1 year home insurance premium. Sometimes it's paid outside of closing, sometimes it's paid at closing. Just depends on the insurance agency and the lender requirements. Your down payment, if you have any. And then the initial earnest money credit will be credited back. So whatever your total closing costs will be, it will be less that initial earnest money deposit. So Cody, really quickly, because I know we're pushing time a little bit here, what is the difference between the lenders and owners title insurance that I just mentioned?
So as you said, lender's title insurance is required. It is an insurance policy that would basically cover the bank, naturally, in a case that there was something that wasn't found within the title work, because there are certain things that, a fraudulent deed that was filed or a forged signature or something that that an attorney couldn't catch necessarily within a title search and would not necessarily be covered by their malpractice insurance naturally because they couldn't have caught it. So that would cover the bank in the event of something happening that would cause you to basically lose chain of title, which means you no longer own your home. The owner's title insurance is optional, and I generally recommend doing your research on that. You'll typically find it swings very heavily either way. But most of the time, what I would say is contact the closing attorney that has performed the title work or the title search and see what their comfort level is as far as within their title search, whether or not they recommend that you would purchase it or not.
Okay, awesome. That's awesome. Now, and yeah, I absolutely agree. Definitely a question for the settlement attorney, but some people kind of get confused with the difference between the two is. Now, seller expenses, now, and let me clarify something. Buyer's expenses, you actually have to bring to closing. This is, you need to get a certified check and bring it to closing. Seller expenses are simply deducted from those are just deducted from your proceeds at closing. So you don't actually have to bring a check to closing to cover your expenses typically. Those would include the broker commission that was agreed upon whenever you listed the property. The transfer taxes, that is a state tax, it's a state county tax actually, that is collected based on the sales price of the home. So in Montague County, it's $4.40 per $1,000 of sales price. Same in Marion County, a little bit higher in Preston County, so it just kind of depends. The transfer tax in Pennsylvania is calculated differently. I'm not going to get into that, but because we're licensed in both states, I wanted to clarify that just in case we have any Pennsylvania people here. The deed preparation, which is what you pay to the deed attorney. An excise tax in West Virginia that is collected by West Virginia. It's a $20 required tax. Recording the payoff of your mortgage. That's charged per page. Your lien payoff, so the lien is the technical term for your mortgage. So whatever, if you have a first mortgage, a home equity line of credit, if you have a second mortgage, any loan that you have with using your house as collateral is called a lien, and that will be paid off as well. And then any negotiated terms, such as the credit towards the buyer's closing costs or the home warranty. So those are all the seller's expenses that are just, like I said, deducted from the proceeds of the sale of your home, assuming that you have proceeds. And then the final steps, everybody calls the utility companies and changes them over. You review the final closing disclosure, which outlines all of your expenses. You procure your payoff of your mortgage if you're the seller. You procure the certified funds if you're the buyer, because you can't bring a personal check. You have to bring a certified check. Buyers do the final walkthrough. You come to closing day, which is the most exciting part. In closing day, you want to make sure you bring your driver's license, make sure you bring your certified check. Sellers, you can bring your extra keys and your garage door openers, or you can just leave them there at the counter. And then you also bring your happy faces, because voila, you can celebrate and relax. You have finally crossed the threshold of closing day and into or out of your home, and you can all pat yourself on the back. Yay! All right, awesome. So that's it. That's what we have for you today. Does anybody have any final questions, thoughts, concerns that we, either Sean with Eagle-Eyed Home Inspections, or Cody with First United Bank, or myself can answer for you? Sean, thank you so much. Any final words?
No, but we're all in your corner, and everyone's here to help you and get that perfect home that you want. So
awesome. Thank you. I really appreciate all of your experience and insight. How about Cody? Thank you. Do you have any final words?
Just to pretty much mirror what Sean said, don't forget we're all here to work for you, and don't ever feel like you're inconveniencing us, because it's our job and it's our passion to help you get to the closing table.
Awesome. Well, I want to thank everybody for coming, and same with White Diamond. We have a team here of dedicated professionals who can answer any questions that you have in the future. Again, I have recorded most of this. I didn't hit resume recording until a couple minutes in, but most of it got recorded. So I can send this to your emails, and I will also be posting it on our website, whitediamondrealty.net. And that's it, you guys. I really appreciate it. Have a great evening, and take care. Bye-bye.